In a market that never sleeps and where fortunes can shift in hours, Bitcoin has once again captured the spotlight with a powerful surge fueled by relentless institutional buying through exchange-traded funds. As spot Bitcoin ETFs record their strongest inflow streaks of 2026, the broader cryptocurrency landscape is showing signs of renewed vitality, raising serious questions about whether Ethereum and leading altcoins are poised for their own explosive moves. Welcome to this detailed update from Crypto Hub, your trusted source for clear professional analysis of the digital asset markets. Today, we examine the mechanics behind Bitcoin's recent rally, the scale of ETF-driven capital flows, the positioning of Ethereum, and the potential catalysts that could propel altcoins higher in the coming months. Bitcoin's performance in April 2026 has been nothing short of impressive. Trading near the $76,000 to $79,000 range in recent sessions, the flagship cryptocurrency has climbed roughly 12 to 16% for the month, recovering from earlier year-to-date pressures and testing levels not consistently seen since earlier in the year. This upward momentum is not the result of speculative retail frenzy or leveraged short squeezes that defined past cycles. Instead, it reflects a more mature, structurally supported advance driven by sustained institutional accumulation. Spot Bitcoin ETFs in the United States have logged multiple consecutive weeks of strong net inflows, with one recent week alone attracting over $1.2 billion into digital asset investment products, according to CoinShares data. Bitcoin-specific funds captured the lion's share, approximately $933 million in that period, marking the fourth straight week of positive flows and pushing monthly totals close to or exceeding $2.4 billion in some reports. BlackRock's iShares Bitcoin Trust, ticker IBIT, continues to dominate this narrative. The fund has accumulated hundreds of millions in fresh capital nearly every trading day during the streak, with single-day inflows sometimes reaching $246 million or more. As of late April, IBIT alone holds over 800,000 Bitcoin, representing a significant portion of the total Bitcoin supply locked away in these regulated vehicles, figures approaching 3.8% of circulating supply in some estimates. This concentration matters because it effectively removes large quantities of Bitcoin from active trading inventories on exchanges, tightening the available float at a time when demand is accelerating. Other major players, including Fidelity's FBTC and additional products, have contributed to the overall momentum, though BlackRock's scale sets the pace. Cumulative inflows across all U.S. spot Bitcoin ETFs now sit comfortably above $58 billion lifetime, with recent activity helping to flip year-to-date figures back into positive territory after earlier outflows. What makes these flows particularly noteworthy is their consistency amid a complex macroeconomic backdrop. Investors appear to be positioning ahead of key Federal Reserve decisions, with prediction markets pricing in limited near-term rate adjustments. Geopolitical developments, including reported easing of tensions in certain regions, have also provided a tailwind by improving overall risk sentiment. Unlike previous rallies that sometimes collapsed under their own weight due to over-leveraged positions, the current move features lower volatility compared to traditional equities in some metrics and is backed by long-only institutional capital rather than speculative derivatives. Exchange reserves for Bitcoin have declined notably, signaling that holders are moving coins into cold storage or ETF custody rather than preparing for sales. This supply shock dynamic, where new issuance from mining is dwarfed by the volume being absorbed by ETFs, creates a structural imbalance that many analysts view as supportive of higher prices over the medium term. MicroStrategy's continued aggressive accumulation adds another layer of validation. The company recently added thousands of additional Bitcoin to its treasury, funded through sophisticated capital raises, bringing its total holdings well into the hundreds of thousands. Such corporate treasury adoption, combined with ETF flows, underscores a maturing view of Bitcoin as a strategic reserve asset rather than a purely speculative instrument. As more traditional financial institutions gain the ability to distribute these ETF products to their clients, evidenced by expanded broker access at firms like Morgan Stanley, the addressable market for Bitcoin exposure continues to widen. This is not overnight hype. It is the gradual integration of digital assets into mainstream portfolios, a process that reduces perceived risk and encourages larger allocations over time. Turning to Ethereum, the second largest cryptocurrency by market capitalization, the picture is one of cautious optimism with building tailwinds. ETH has traded in a relatively tight range recently, hovering near the $2,200 to $20,400 zone as of late April 2026. While it has not matched Bitcoin's percentage gains in the immediate term, spot Ethereum ETFs are showing their strongest performance of the year so far. Monthly inflows into these products have approached or exceeded $500 million in recent tracking, with several consecutive days of positive net buying. This marks a reversal from earlier periods of net outflows and suggests institutions are beginning to diversify their crypto allocations beyond Bitcoin. Ethereum's unique value proposition, its role as the backbone for decentralized finance, non-fungible tokens, and a vast ecosystem of decentralized applications, positions it differently from Bitcoin's store of value narrative. The upcoming Glamsterdam upgrade, expected in the third quarter of 2026, represents a significant technical catalyst. This network improvement is anticipated to enhance scalability, efficiency, and overall user experience on the Ethereum blockchain, potentially addressing lingering concerns around transaction costs and throughput during periods of high demand. On-chain fundamentals remain constructive. A substantial portion of ETH supply is now staked, reducing liquid circulating supply, while exchange reserves sit at multi-year lows. These metrics indicate long-term holder conviction. If ETF inflows accelerate further, potentially crossing the $800 million monthly threshold that some analysts view as a tipping point, Ethereum could see renewed upward pressure. Price forecasts for the remainder of 2026 vary, but base case scenarios from multiple sources cluster in the $5,000 to $8,000 range, assuming continued institutional participation and successful network upgrades. More bullish outlooks extend toward $9,000 to $12,000 should multiple catalysts align perfectly, including broader macro easing and stronger risk appetite across global markets. The altcoin sector, often referred to as everything beyond Bitcoin and sometimes Ethereum, stands ready to benefit from any spillover effect. Historical market cycles have shown that Bitcoin dominance tends to peak during the early stages of a rally before capital rotates into higher beta assets. With Bitcoin absorbing significant institutional flows first, the stage is being set for selective altcoin outperformance if sentiment improves. Projects with strong real-world utility, active development roadmaps, and growing adoption metrics are best positioned. Solana, for instance, continues to attract attention for its high-throughput capabilities and expanding ecosystem in decentralized applications and payments. Ripple's XRP maintains relevance amid ongoing regulatory clarity and cross-border payment use cases. Other names frequently discussed include Polygon for scaling solutions, Chainlink for Oracle services that connect blockchains to real-world data, and emerging sectors such as decentralized artificial intelligence or tokenized real-world assets. Several factors could catalyze a broader altcoin explosion. First, sustained Bitcoin stability or continued gains above key psychological levels like $80,000 would likely boost overall market confidence. Second, regulatory developments in major jurisdictions remain pivotal. Any signals of clearer frameworks or supportive policies could unlock additional institutional capital. Third, the expansion of ETF products themselves, if approvals or launches extend beyond Bitcoin and Ethereum to include baskets or specific altcoins, would represent a game-changing development for liquidity and accessibility. While such products are still speculative at this stage, the trajectory of crypto ETF innovation points toward broader inclusion over time. Finally, macroeconomic conditions play a decisive role. Should central banks signal more accommodative policies, or if inflation concerns moderate, risk assets, including altcoins, typically respond positively. It is important, however, to approach these opportunities with a measured perspective. Cryptocurrency markets remain volatile by nature, influenced by global events, regulatory shifts, and sentiment swings that can occur rapidly. The inflows we are witnessing today demonstrate institutional maturity, but they do not eliminate downside risks entirely. Investors should focus on projects with transparent teams, proven technology, and genuine utility rather than chasing short-term hype. Diversification, thorough due diligence, and a long-term horizon remain essential principles in this space. Position sizing should reflect individual risk tolerance, and no investment decision should be made solely on the basis of recent price action or inflow headlines. Looking ahead, the convergence of record ETF inflows, tightening Bitcoin supply dynamics, Ethereum's technical upgrades, and the potential for capital rotation creates a compelling setup for the cryptocurrency market in 2026. Bitcoin's role as the digital gold standard appears more entrenched than ever, providing a foundation upon which the broader ecosystem can build. Ethereum's smart contract capabilities continue to power innovation across decentralized finance and beyond, while select altcoins offer asymmetric upside for those who identify fundamental strength early. The institutionalization of crypto through regulated vehicles like ETFs marks a profound shift from the industry's earlier days, bringing greater legitimacy, deeper liquidity, and more sophisticated participants. At CryptoHub, we remain committed to delivering balanced, fact-based insights that help our audience navigate these developments with clarity. The current environment suggests that while Bitcoin leads the charge today, the entire digital asset class stands to benefit from the structural changes underway. Whether you are a seasoned investor or someone exploring this space for the first time, staying informed about ETF flows, network upgrades, and macroeconomic signals will be critical in the months ahead. We encourage our viewers to conduct their own research, consider multiple perspectives, and approach the market with both enthusiasm and prudence. Thank you for joining us on CryptoHub for this comprehensive update on Bitcoin's surge, the boom in ETFs, and the readiness of Ethereum and altcoins. Stay tuned for more professional analysis as the market evolves, and remember that in the world of digital assets, knowledge and patience often prove to be the most valuable holdings. We look forward to seeing you in the next video. Until then, trade wisely and invest responsibly. This has been CryptoHub.